Well, hello everyone. Welcome to Long Verticals and Diagonals. My name is Barb Armstrong. I'm a coach with Schwab, and I'm pleased to be filling in for Mr. Ben Watson, who is heading for Houston, where tomorrow we will have our last in-person event of the year. I'm trying not to pout that I'm not on a plane with him. Because I was originally, scheduled to attend that event. But Mr. Brent Moores is going to be there. He's a great coach, a super nice guy. So if you are heading for Houston, please make it a point to get up and talk to both of those coaches when and if you can. I'm sure it's going to be a great event. And for those of us who aren't on planes, trains, or automobiles heading for Houston today, we are going to talk long verticals, my friends. And I used to teach this class, so it's like coming home to be able to teach it again for the next couple of weeks. I'll be teaching it this week and next, I do believe. So let's get right down to business. First, if you are not following me on X, it's free to do that. You don't have to follow a million people. You could just follow the coaches. I only do stuff in the world of investing on X. So consider this your formal invitation. My handle, Barb Armstrong CS. Mike Fairborn is with us in the chat. He's a fellow coach and a friend, and he posts a lot of great content too. So you're missing out if you're not following him, Mike Fairborn CS. But I posted a whole pile of stuff yesterday, so you'll want to go check it out. So hello to Greg and Riceburg, who actually is going to be in Houston and is bringing family and friends along with them. And Randy and Frank and the rest of the gang, thanks for being in here early before every class and for participating the way you do. It really makes a big difference, and I do appreciate it. Let's get through some important information so that we can spend the majority of our time on the platform, which is really where we want to be. Know that options carry a high level of risk and aren't suitable for all investors. Certain requirements have to be met in order to trade options on Schwab, and not all will qualify. We use the Paper Money software application on the Thinkorswim desktop platform. Come January, I will be resetting both my accounts, one to like 20 or 25,000. The other I haven't decided yet. I think I'm going to put $1 million in the other account. And I'm going to talk about the schedule a little later on, once we cover some stuff in this class. But the schedule is changing in January. I'm going to be teaching every day. There are 5 new classes that are coming out. But just know that all investing, it doesn't matter which class you attend or which investment you make. And of course, if you're following our classes, you'll want to have your own Paper Money account where you're following along. But know that all investing involves risk, including the loss of principal. We're talking multi-leg option strategies today, and those have a different transaction cost profile because you have multiple legs on every trade. Okay. One of the nuances or differences with Paper Money is that in Paper Money, a short option will never be assigned early. And kind of, we might be saying, oh, boo-hoo, we wish it were otherwise, because, that can work to our advantage when we're looking at long verticals. With short verticals, not so much. But in Paper Money, that can happen. Or sorry, in a live account, that can happen. It won't happen in Paper Money. Okay, so I've got a couple of announcements. I'm going to save those to the end. We're going to go out and talk about, today our focus will be on long verticals and primarily bullish trades. We're going to have a quick look at what's going on in the markets. And then I want to talk a little bit about how when I started my thought process on verticals and how mistaken I was about them. And then we're going to, of course, around that conversation, be placing a bunch of example trades. Okay, so let's start by coming out and seeing, what's cooking with the markets. And so, when we look at the S&P, and I know many of you look at the markets every day, but when we look at the S&P, it's up 27% year to date. Like, that's extraordinary. It's absolutely extraordinary. We're within a hair's breadth of the all-time high on this index. When we look at the NASDAQ, it's kind of more of the same. Like yesterday, we had a new all-time high on this index. Today, we're, consolidating a bit. Of course, it's a live candle, but up 29%. like, holy smokes, Batman. I mean, how can you characterize that as anything other than bullish? Then when we come look at the Dow, I mean, your NASDAQ is tech heavy, and has no financials. The Dow 30, this index is based on the price of the stock as opposed to the market cap, which is what the other indexes are based on. But we've been kind of pulling back now for about 6 trading days after hitting a new all-time high on this index as well. This one up 17%. That may not be the 30% of the NASDAQ, but not too shabby. And after 6 days of pulling back, it's still above the 30-day moving average. So, pretty bullish all around. Chicken Little appears to have gone into hibernation. And we hope she stays there. Somehow, I think of Chicken Little as a woman. Don't ask me why. As female. But we'll never know, right? Given that Chicken Little is a fictional character. And our Russell hit a new all-time high recently too, and has been consolidating. And again, it too above the 30-day moving average, up like the Dow at 17% year to date. So we got, bulls all around. At least that's my interpretation, even though we've seen a little short-term pullback on the Dow and the Russell. And the VIX is sitting under 15 at 1342. It's an indication that overall people are pretty bullish. Okay, so there we have it. Okay, so in our smaller account, we have 3 trades, and we're going to look at one of those trades, which does need some management. But I thought we'd go out and look at some different stocks. And let's say you were at a holiday party last night and somebody said, oh, if you haven't looked at this company, MSTR, you need to do yourself a favor and check them out. They are up phenomenally this year. And you may have never heard of them. Okay, so they are up 552%. So whoever told you that, they were not kidding. I mean, this stock has been on an absolute tear. And if you don't know anything about them, you can come to the Analyze tab, see it's a tech stock. Okay, and what do? They provide artificial AI-powered enterprise analytics and services in the US, Europe, Middle East, Africa, and internationally. Like, that sounds pretty international to me. So there's a lot of geographic diversity. If you want, you can click on these and read these reports, which we are not going to do. If you want to see something on the fundamentals, you can come down here. Now, we're trading a technical pattern, but it are the fundamentals. Their earnings per share went from being down $13 a share to up 264. Their book value skyrocketed up 125%, although their sales didn't respond in kind. So it's like, well, that's interesting. Net profit went up pretty dramatically too. And, from negative $294 a share up to 86. And I'm just pointing this out because if we're talking about Microsoft or Meta or Netflix or some of these big boys, we may look at these all the time. But when we look at this chart, this is what I see: big rise. But, okay, now I've got to change my drawing tool. So we're seeing higher lows, but lower highs. And so we've got this big fat pennant pattern. And has it broken out yet? It has not. And so would we place a trade on it today? Well, some might and some might not. But if we're trying to do this in a conservative way, we might say, well, we're going to wait for it to break out past this diagonal resistance line. But do I see an entry today? No, maybe not. And others might say, but it came down here and we had this Harami pattern at a support level, true, and then it moved up, but it could be hitting this diagonal line and coming back down. And others might say, well, why did you draw your line there? And yeah, good point. Could I have drawn it somewhere else? Like, technical analysis is a bit of an art. So you might have drawn it there and said, well, in that case, it's breaking out. Yeah, but it's starting to pull back. So maybe we look at this one again tomorrow. Oh, speaking of Microsoft, we're out of our trade on Microsoft, whatever that was. We'll look at that, either in the next class, because I'm teaching short verticals. Another one, that they may have said, oh, and you should check out this Mara. So your friend seemed to have been sponsored by the letter M. And here you might say, well, I'm looking, this thing is up 2% year to date. When the NASDAQ's up 30. And again, if you're not familiar with this company, come to the Analyze tab, another tech stock, digital asset. They mine digital assets. So this seems to be kind of Bitcoin related. And again, big move to the upside in earnings per share from $6 a share in the hole to positive. Sales are going up. But if we look at the charts and we say, okay, like if I'm playing I Spy with my little eye, and we come over and we look at this and we say, well, I kind of see a potential resistance level there and here. And so might we see a double bottom pattern? Like that's kind of what I'm seeing, when I glance at this, and it's taken, from what? March, February. This has been setting up since February. But did it break out? Well, it broke out with this one long wick and now it's come back in. So could this turn out to be a cup and this be a handle? Could be. Now, could somebody do a swing trade? Like, so could we buy a long call vertical and just say, hey, when it gets back up to this 27, I'm going to exit the position? We could. I mean, and if you're not familiar with this, you might say, hey, I don't even know if this trades options. Yeah. So we could come and look at that. But some might say this has been consolidating when we have such a bullish market. Is this an area where we want to focus? And some might say, but I see this, Harami pattern here. Check, true. Bouncing off a potential support level. And this has been kind of sort of this 30-day moving average acting as a support level since what? Since October. And since October, we're seeing high, higher, high, higher, high, low, higher, low, higher, low. So is that a possibility? Oh, yeah. Okay, so with Mara, it does, and this has weeklies and high volume. And of course, if you go to the example trading plan, which is in the trade management mini session bucket, there is one for long call verticals. The checklist is, does it trade more than 1 million shares a day? Check. If we're even going out 3 weeks here, and this is a weekly contract, hundreds of contracts, many contracts traded even today. And so if we're trying to do this in a conservative way, could we do the 23 and the 24? It's already at 23.86. Would we get enough premium for that to be worth our while? So 23, 24, 36 cents. Interesting. And is this a volatile stock? Yeah, 114%. But, it's almost through both strikes and, we're paying less than 50 cents. So you might say, well, you know what? Like that's a bit of all right. Now, this sounds interesting to me because then I could put in a target at 60 cents, leaving 40 cents on the table. I'd still be up. I'd still be up 50%. So if we say, okay, we're willing to risk a max of $500. So we're going to do 10 of these. And you might say, well, why don't you make it a wider spread? Well, we've had that conversation before. Because if I make it like, say, 23, 25, then it has to go up another $1. And I'm paying an extra $1.30 to get in. if I do half the number of contracts, if I do 5 contracts versus 10, I'm paying an extra $1.30 per contract to get in and an extra $1.30 per contract to get out. But if I go to 23.25, I'm paying less, but then the probability goes down from 98% of it touching to 85. And the probability of it being in the money goes down also. And so we're going to just stick with, well, actually, you know what? Let's do a comparison. So we'll do 5 of these like this with a $1 strike. Actually, we'll do 6. I'm living large today, so we're going to do 6. Let me get rid of that. Okay, we're going to do 6. We're at 30 cents now. Single order, first trigger sequence, create an opposite order, and we're going to say, hey, when this gets to 45, if we get in for 31, we're willing to exit. Okay, now it's 32 times 1.5 because we want a 50% gain. Okay, so this should be 48 cents. Okay, confirm and send. And we're going to put this in our long call vertical group, and we are going to compare to the $2 wide strike. Okay, so fire in the hole. Okay, then we're going to do another one, same expiration. And the reason I did 6 is so that we can do 3 of the $2 wides, and it's kind of a closer to apples. And again, we're going to buy the 23, although this time we're going to sell the 25. Okay, now we're paying 74 cents to get in. And if I take 74 and I multiply that by 1.5, means we want to exit at 111. We'd have a 50% gain. And so our exit is based on, the price of the stock, the price of the option, not, so we'll make this make it 112. It's based on the price of the option, not the price of the stock. And we're going to put that in long call verticals, and we're going to compare to the $1 wide strike trade. Okay, so how much could we lose here? $222. That's our theoretical max loss. How much could we make? Well, we could make up to 378, but we're saying, like, if we make half that, if we can make like $110, like a third of that, we'd be happy. Okay. Okay, so we've got those 2 in. Now, I want to come back and look at the charts for 1 sec on this. And I will add these to the charts after the class. But our strikes, well, here, if our one strike is 23 and 24, the other strike is 23 and 25. So if I add the longer one, long call vertical, 23, 25, Jan 3rd, and we put it on the right, even with the higher strike, we don't even have to come anywhere close to this 27. But one of the things that I thought when I first started trading these is if it went through both strikes, I'd have my max gain or close to it. And that doesn't always work out exactly. Well, it doesn't work out that way because we have time that plays a role and volatility that plays a role. Okay, so but ultimately we want it to go through both strikes and stay there. And if our strikes, the other thing I want to address is, remember I said at the beginning of the webcast that if we had something like this. Here's our strike at 2025 and our strike at 23. And let's say that it goes through both strikes, and let's say some news comes out, it gaps up, and we get called out. Now, we bought this one, so we're in the driver's seat. We've sold this one, and it can be assigned at any time. So let's say it's assigned, and do we own Mara? We do not. Okay, we do not own it. And so what would we do if we are called out prior to expiration? Well, one, our goal wasn't even to make our max gain, and we just made our max gain. So we are thrilled. We're just doing the happy dance. Champagne corks are flying, like, we're doing the happy dance. But so what we would do is we would go in and exercise our right to buy the stock to meet the requirement to sell it. You might say, well, how do you do that? Well, I'm glad you asked, because I'm going to show you how to do that as well. Okay. So I have to get rid of my drawing tool here. And we just happen to have a couple of long call trades on. So with Mara, if I try and do this on Mara right now, it's not going to show me the exercise. But in here, if you just had a long call, it would show you the exercise. So let me just show that. So long call. So, Microsoft hit our target. So with PayPal, let's say I wanted to exercise it. I'm going to come here. I'd have to cancel this order. But when you look in here, there will be an option to exercise. Okay, because this is a long call. Right here. So I'm saying, okay, I want to buy the stock at 92.50. And so that is what you would do. Say, I'm exercising my right, which I have because I own this call, to do this. Okay, now I'm just throwing this out. Like if the trade we just placed, if the stock goes down, we could end up losing 100%. But we'll never be called out in paper money. And I think it's more important actually to walk through that on short verticals, where you can get yourself in a more of a pickle, and we'll discuss that in the short vertical class. But so there's our first example. Okay, so let's come and look at Citi now. And let me just come and look at the chat also. Yes, Costco is coming with earnings today. Learning how to do option, giving myself 3 months. So D'Angelo, if you haven't tapped into the Getting Started with Options series, I'd recommend that you do that. Mike will put a link into that series for you. I always put a link into that series at the end of this class if you're watching this in the archives. Yeah. So we had a long call on Microsoft, and we're out of that now. You are correct. Okay. Yeah. Yeah, our trade loss on these is 500 because I'm putting it in the trading a smaller account class, which is sitting at, 43,000. We actually started at 20,000 back in November. So it has been an extraordinary year, not a typical year by any stretch. Now, when I first looked at this morning, it's up 40% year to date. So it's outperforming the NASDAQ and the S&P. It had this period of consolidation. Okay. So some might look at this and it's not perfect, as things often are not perfect. I get rid of this line. we can see we've got earnings coming up. So we need to be aware of that. That's January 15th. So if we were to place a trade, would we, want to exit prior to the 15th? Yes. And that's one of the rules in our example trading plan. It may not be a rule in your example trading plan. But if we look at this and say, well, if I'm playing this I SPY, I see a bit of it's not perfect because it didn't come all the way up here, but it kind of looks like we certainly have a cup and handle. And it looks a bit like an inverted head and shoulders, but it's gone from 56 or 57 to 67. So, kind of a $10 to $11 range. So then a technician, a $10 to $11 range might say, well, then I'm expecting this to go up to kind of 77, 78. And, we've got this inverted hammer pattern on the candle, on the chart, which kind of keeps going back and forth between, being green and not being green. And so I just want more space at the top here. Our price access, we're going to go to auto. So let's give it. There we go. So when we kind of look at this and say, well, it's come back to this 10-day moving average, which has been acting as support. It's up. Could we see this going up? And, it's flirting. You might say, well, I want to give it another day. Well, let's say you're going on vacation, starting tomorrow. For a week, it's been kind of hanging out here. So, if we're bullish, it's part of the financial sector. And if you didn't know that, you come to the Analyze tab, it'll tell you Citigroup, it's a diversified financial service holding company. It's in the financial sector. Looks like, the analysts seem to have a bit of a love on going for this thing. But, we can also see in the last 3 months, communications, consumer discretionary. So the Metas, the consumer, the car companies, et cetera, and financials have been leading the pack. And so could we expect, when we look at this chart, that this might continue to go up? And again, this is, it's interesting because it's in that $71 range. So could we, and just recently hit this high of 73, could we come out here and we could come out to January and say, well, what if it consolidates and it takes some time? We could give it more time. Like we've got 30,000 contracts. Is it over 1 million shares traded? Yes. Tons of contracts. Could we do this 70 and the 72.50? What was that high? It was just over 73. So we could say, yeah, we could see this going up in the next month to 72.50. Sorry, let's come over here. So we're going to come and say, well, can we get enough premium for this to be worth our while? We're going to buy a vertical, $1.43 on a 250 wide strike. So if I take my $1.43 and multiply that by 1.5, I'd want to get out around 215. My max gain would be 250. So if we say, well, how many of these could we do? Well, if we did 3, we'd be, getting closer to 500, but we wouldn't be over. We'd be around 450-ish, just a little less, 429. So is that acceptable? An acceptable level of risk? It is for us in, following our rules. So we're going to put our exit at 214 or 215. And, we're just going for a little win, base hit. And you might say, well, we're looking at making what, around $60 a contract, $180. It's like, that's not flying me to Tahiti. It's like, no, but it could be paying a utility bill or, it could be helping grow your account. We started this account with 20,000. That's almost 1% of our initial account value. And so, our tagline, it's like base hits are a beautiful thing and don't be a greedy guts. Like, don't be greedy. Like, just go for a little win. Because what I found when I was trying to get the whole enchilada, I had a far higher percentage of losing trades. And so we're going for this small win. Now, again, I just want to compare this. So we're going out 36 days. Could we, so this is maybe compare to a smaller strike, shorter time frame. So if you're really bullish or more bullish, and this is, kind of part of the decision. Like, so who's saying we have to go out 36 days if we're looking in that 20 to 50 day time frame? We could come out, and one of the advantages of weeklies is the spreads are often that, we have different spread choices. So instead of it being a 250, we could do the 71 and the 72. So again, we could do a dollar wide strike. And, and then we can do, more contracts. So if we say buy vertical, 71, 72. Now, what are the probabilities here? Well, when we look at 71, 72, you've got a 98% chance of it at least kissing that 72 line. You've got a 48.8, call it a 49% chance of it being in the money come January 10th. Okay, so it's, the probabilities are good that it's going to go through that 72 strike. Well, it's sitting at 71.89 right now. It only has 11 cents to go to get there. So if we took our 58 and we multiplied that by 1.5, we'd want to get out at 87. And of course, if we're risking 500, how many of these could we do? I'm guessing probably 9. That would be 522. We're going to do 8. Okay. So how much are we risking? $464. How much can we make? $336. But are we going to go for the whole enchilada? We are not. We're going to say, hey, I'm going to create an opposite order. Say, hey, if this now $1 is our max gain, and to go for 50% would be 87 cents. And so we're going to watch this. And if it gets close, like if it gets up to maybe 80 cents, we might say, hey, you know what? That's good enough. That's good enough. So good till canceled. But we're going to put this in with this 50% target like we did on the other one. But this is one of these rules that we can massage and say, you know what? I'd be more comfortable making this 75 and going for a smaller percentage. But I'm never, just because I had 10 winning trades in a row, and we haven't, by the way, but if I had 10 winning trades in a row, I might be tempted to, bump up my max loss scenario. And some people might say, I'm going to look at that on a quarterly basis. We started with 500, we've stayed with 500 because that percentage was high relative to our total account size. It was 3% we were risking on a single trade when we started. And that may make some people itch. If you had $1 million account, you might say, I'm going to make it 1/3% or 0.5% is the most I'm willing to risk. But sometimes with, smaller accounts, percentage wise, if we want to be able to place a trade, we have to make that percentage number a little higher. And even though our account size has doubled, we haven't increased the amount we're risking per trade. And you might say, and I'm not going to do that until it represents 1% of my portfolio. And still, we're not there. Okay. Fire in the hole. Oh, and we're going to compare this to the wider strike. Okay, now, if we go to our rules, and let me just show you, I'm going to bring this over. So you want to make sure you subscribe to the channel. So here's the Getting Started with Options series. And I'll just post that in here. Again, I'm sure that Mike's already done that. So this is the Getting Started with Options. I just put the link into that. And there's a class that's dedicated, well, I had it up, to long call verticals. Here it is. So we just spend the whole 45 minutes going over kind of what a long call vertical is. So if you're new to options, this is learning a whole new language. Now there is an example trading plan, and I haven't created as many of these as I would have liked yet. By the end of this week, I promised I'd do one on buy right covered calls. So I still have that on my list for this week. We did one long calls with one ATR targets, but here's our long call verticals. And here's an example trading plan. So this is the trade management mini sessions. Okay, somebody also asked me in the comments, they said, you showed how to create watch lists by sector. So I'm going to add another mini session that I'll record today on that, and it will show up down here in the turquoise section, which is ones that are related to Thinkorswim. So I've done some, how to customize your option chain or a watch list or customize a chart. So look in here if you want to see how to create watch lists of the sectors. And then these are the postmortems in the orange on the trades. Okay. So I just wanted to make sure you were aware of those resources. Now I've also, invited you to join us in the land of X. And I'm bringing this up just so that I can point out, the kind of content, but that kind of, I said I'd make some announcements at the end. So next year, there are going to be 5 new webcasts. And I just noticed I only wrote down 4. There's going to be one on swing trading, one on trading index options, which I think is kind of exciting, trading price patterns. And this will not just be an option class, and it won't just be a short-term trading class. It will be both an investing class, so using price patterns to identify longer-term trends where, let's say you inherited $1 million and you want to build a portfolio. I'm going to be teaching that. And then there will be short-term trades in that one as well. And it's not just going to be, it's going to be stocks and options. And the same with this after-hours trading. So I attended a workshop, a 4-day workshop that they used to call the 4-day live. And a lot of really great trading patterns were discussed. And those trades were always placed after the market closed. So what happens if you have a full-time job? So these are coming in January, these new webcasts. And then I have a new schedule in January. So I always put these annoying GIFs in there if I'm posting, a mini session once it's ready. But I'll still be teaching trading a smaller account. Cameron May and I are going to trade places. He's going to start teaching getting started with options. I'm going to start teaching getting started with technical analysis. I'm pretty jazzed about that, I got to say. And then trading price patterns and after hours trading. But one of the things I try and do is post, images of charts, or images of chart patterns. Yesterday it was, stocks because it's earnings season, but I'm posting lots of chart patterns as we go through the week. And so it's just another resource that you can tap into. Okay. Somebody's saying they had just placed a trade on C, great minds think alike. I don't know what AH means, Josh. Yeah. Would you be teaching how to get $1 million? I can hum that song done by the Bare Naked Ladies if I had $1 million, but yes, I'm teaching how to get $1 million by teaching trading a smaller account, which is like we all started out somewhere. Yeah. There is a class on trading futures, which also covers Forex. Yeah. And I know sometimes change is annoying. And I'm excited about it, but I know that I'm going to put a lot of work into, creating a great curriculum for these classes that are new to me and new to all of us. Somebody saying, find, patterns for the Santa rally. I'll see what I can do. Now, I want to talk for a minute about trade management. So let's go back to our monitor tab, because when you go through that example trading plan, it says we want to get out when we hit 50% or if we lose more than 50%. Oh, now it looks like Starbucks is rallying. So we're down 50% on Starbucks. So let's go and look at the chart, because what our rules say is, hey, if we're down 50%, we're going to exit. So when we look at this, what did we have? We had this consolidation pattern. We placed the trade on this day when it broke out. And then it annoyingly went sideways and kind of came in and looks like it's kind of bouncing off this diagonal support level. And when we really hone in, we see that we had this Harami pattern yesterday and we have a bullish engulfing pattern today. And so even though we're down 53%, that means watch this like a hawk. We're not going to exit the position, but we will look at it again tomorrow. Okay. So did this trade management of the 5 long call verticals take a long time? The question when we look at this, you add profit and loss by coming here and you type in PL and we added profit and loss percentage. You add that. I already have it, so I don't need it. But if you don't have it, that's how you add it. Are we close to 50% up on anything? No. Are we close to 50% down? Starbucks, we better have a look, make an informed decision. That took us about, a minute? And I was talking about it. If it was in your live account, you might have done that whole thing in 30 seconds. So it's not like this needs to be my full-time job. Can you tell I'm kind of losing my voice? So there we have it. Okay. So we did, and one of the things that I get often in the surveys is please review the trades that we've done. Now, we placed 2 trades on Mara. One has not gone through, so I'll go through and make sure that goes through. And then we placed 2 long call verticals on Mara, 2 long call verticals on a Citigroup. And if you wanted more to practice on, you could come and look at Palantir, which we just didn't get to today. We could look at AAOI. We could look at Walmart. These are all, potential opportunities. But within one class, we have 45 minutes. We just do what we can with the time that we've got. And it's not just about placing trades or trading places. It's also about understanding the thought process behind the decisions we make, understanding, what a trading plan looks like and how we might choose to follow it and which rules are kind of set in stone and which ones we can massage a little. So it's the whole enchilada. But so my ask as we wrap things up is if you would do me a favor and hit the like button, I'd appreciate it. It helps move this up in the YouTube algorithm so more people can find this content. It also lets Mike and I know that you found this valuable. So hit the like button, subscribe to the channel, follow Mike and I in the land of X, Mike Fairborn CS, Barb Armstrong CS, and last but not least, there is a survey today. So here's where you can have your voice heard. 2 questions. 1, I hated it. 10, I loved it. And I'm going to become a regular, and everything in between. If you fill it out, I promise to read each and every comment because there's an ability to put comments in. So let me know what you'd like to see more of in this class. Let me know if there are additional topics you'd like me to cover. I'm coming back next week, but I promise I'll pass these comments on to Ben, who normally teaches this class as well. So guys, that's a wrap for today. Thank you so much for joining me. If you haven't had enough of me yet, I'm back for long verticals at, I believe it's 2 o'clock, or short verticals at 2 o'clock Eastern. So I will see you then. Take care and have an awesome day. Bye for now.